In this video, I'm going to talk about the Fibonacci Retracement tool. So here's what the tool looks like in TradingView. And the Fibonacci sequence is a pattern of numbers. It occurs in nature, and a European mathematician came up with it hundreds of years ago. And the numbers I use are the 0.382, 0.618, 0.5, and 0.715. So this is how mine's set up on TradingView. And here's what the tool looks like by itself. And you can see this is drawn from the top down. So if price was to move down to here, these are the retracement levels. As my example here, this is an actual trade I took on June 24th, and this is my entry, this was my target, and then my stop is represented by the red shaded area. Full disclosure, I did not profit on this trade. I was actually taken out for break even. On the lower time frames, it was showing some bearish price action. I moved my stop up to break even, and you can see it took me out on, I think, the 9th or the 10th, where that red doji is. As I put my cursor over, the numbers are blocking it. But I was taken out for break even on this. It did go on to hit my profit target, which was at the most recent highs. So with the Fibonacci, you're not going to use it as a standalone analysis, but coupled with this support and resistance line, this trend line, the retest of the 50 EMA, a higher high formed, now it's forming a new lower low, all the technical analysis being used together, it makes it powerful when you have areas where all these things line up. So again, the tool is not a standalone, it doesn't make an edge on its own, but whenever you use it with other tools, it can help for more clarity on a trade. I'm going to go ahead and remove my position just so you can see it a little better. You can see here's 0.382. It kind of stalled there and came and rejected the 0.5 pretty much perfectly, and then went on to form another higher high. So this is just a very simple explanation for people who don't know how to draw them in. You start from the most recent lows and go to the most recent highs. Obviously, there's been another high since this trade was taken. I will just show you again quickly. So if you're drawing it in from the top, again, you just go to the most recent price action down to the low. If it was right here, you can see it retraced up to 0.382 there, went on to form another lower low. You could still draw it in here, and you can see then it retraced to 0.5 as well. I don't believe, I didn't take that trade. This is just an example of how you would draw it in. I'll do one more. There's a gap here, so I don't know. This is just for drawing in purposes, but the low, it made a new higher high, and it did not come back down to 0.382. The 50 EMA held price, and it continued to go on. But that's how you would accurately draw in to see where it retraced to. So I hope this video helps. Just remember, it does work, but it's not a standalone. You're not going to do analysis just on the Fibonacci levels itself. So I hope this video helps. If you have any questions, leave them in the comments, and I'll be happy to help.